Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Since yesterday's video, Bitcoin's price has stayed tightly range-bound just below the key resistance zone near 112,000. This level has repeatedly stopped short-term advances. The cluster of rejection wicks near that zone, along with fading momentum, shows that the market is in balance before the next potential volatility burst. Looking at the moving averages, the price still holds above the 200 EMA, a crucial dynamic floor. But the shorter 21 and 50 EMAs are starting to flatten, reflecting a pause in directional strength. On our wave trend indicator, momentum remains positive but weaker than before, forming a mild divergence compared to recent highs. Money flow is slightly positive, buyers are still there, but less aggressive. The MACD histogram is compressing near the zero line, showing fading momentum and the potential for a crossover if volatility returns. RSI sits around the mid-50s, matching this sideways behavior rather than signaling any overextension. Overall, unless Bitcoin breaks above 112,000 with clear volume confirmation, the setup favors a pullback toward the 111,000 support zone, where the moving averages and prior liquidity could trigger the next reaction. Looking at the 3-day liquidation heat map, the bounds between buyers and sellers is clear. The most active zones are between 112.2 and 114,000 above, and between 109.6 and 108.2 thousand below. In the bigger picture, there's an interesting comparison chart showing Bitcoin versus the Nasdaq 100 over the past 5 years, based on a simple log linear regression model. The orange line shows Bitcoin's real price history, while the blue line tracks its fair value tied to the Nasdaq's tech-driven growth, especially since the ETF brought in more institutional activity. Right now at around 110,000, Bitcoin trades roughly 31% below that model-implied fair value of 156,000. That points to possible undervaluation and growing long-term optimism as Bitcoin continues to mature alongside traditional risk assets. If this correlation holds, there's room for potential recovery toward that range, though macro conditions will play a major role. For now, data suggests continued consolidation, waiting for either a confirmed breakout or a test of lower levels. I'll continue updating you daily. Join the free Discord for real-time thoughts. Thanks for leaving a comment, it really helps the channel grow. And if you got value from this video, click the like button, subscribe, and turn on the notification bell to stay updated. And see you in the next one.